After last week's brutal meltdown, is there any hope for a Santa Claus rally over the next couple of weeks? Historically, this tends to be the most wonderful time of the year for stocks. So after today, you got to wonder about that, right? Last week, Fed slammed us, right, with a statement that left a lot of investors shaken, worrying that JPAL will keep tightening aggressively even as the economy slows down dramatically. That's what I talked about at the top of the show. Now I want to talk about it again, but in a different way. I'm surprised that people are so shocked. I didn't think the Fed meeting was all that revelatory, and the economy's been pretty robust. So if it really does take a beating, I figure Powell will just change his strategy. Let's get back to the Santa Claus rally, though. There's now a widespread sense of doom and gloom as though Wall Street's only getting lumps of coal this Christmas. But you know what? This kind of negativity is exactly the kind of setup you need before a nice bounce. That's why tonight we're going off the charts with the help of Larry Williams. He's the legendary technician and market historian who's been the top expert in the space since I was a little kid. Larry's written over a dozen books and created a host of his own proprietary technical indicators, which we use all the time. And you can find a lot of them. Well, you find everything if you just went to this website called ireallytrade.com. More important, he nailed the COVID bottom in April of 2020 when practically every other expert still thought the sky was falling. And his recent track record has been very impressive, including the run-up and then recently saying that December would be choppy. But Williams now remains adamant that the Christmas rally is one of the most consistent seasonal patterns out there. Once you look at the data, it's crystal clear that Santa Claus is coming to town. For him. It's only a question of when, not if. Listen to this. If you purchase the S&P 500 E-mini futures on December 22nd or December 23rd using an $1,800 stop-loss order, then held for 5 days before selling into the first profitable opening, you would have had 21 workable trades, and all of them were profitable. Every single one. According to Williams, the key here is to look at the calendar and identify the seasonal sweet spot. Based on the historical data, he usually finds it falls between the 22nd or the 23rd, which you know. I mean, I'm looking at this. It's like, oh, any day now. Okay, so take a look at the daily chart at the action, the S&P futures, for last December. The blue line at the bottom shows you Larry's seasonal forecast. All right. You can see the best buying opportunities come in mid to late December. And this Santa Claus rally tends to last through January 10. Sure enough, last year we got a nice run from December 20th through the end of the year, even as the overall market was very much in bear mode. So what's it looking like this year? All right, check out the daily chart of the S&P futures, once again with the seasonal pattern down in blue at the bottom. As you can see, we've just entered the seasonal sweet spot, and Williams says that if history's any guide, then Thursday would be the ideal moment to buy ahead of a potential Christmas rally. Yeah, I know after today's brutal day, you're thinking, oh, that's years away. But it isn't. It's actually just a couple of days away. I know it's hard to believe that the market is ready to run, but that's how it always is with Larry's calls. Although it's possible this year will be different historically, betting against him has been a real bad strategy. Of course, it's not just the seasonal pattern that's making him feel more bullish here. There's a lot going on right now that makes Williams believe the market might be ready to bottom. Boy, it sure doesn't feel like that. Why does he feel this way? Well, first, take a look at the chart of the Consumer Price Index for all urban consumers. This is going all the way back to 1960. Okay? I mean, so we're really talking about some real history. For the past year, we've been hammered by high inflation, right? Because the Fed's not going to stop raising interest rates until it gets these price increases under control. But as William points out, inflation's now peaked. It's very clear from the most recent data. And as you can see from this chart, when inflation peaks, it really peaks. Look at this. Look at this, huh? There's no fake out. It peaks and then it falls hard. If history is any guide, it usually takes a couple of years at most to get back to much lower levels. Even in the 60s and 70s, when the Fed was much less aggressive about maintaining price stability, once inflation peaked, it came down rapidly. This was really horrible days, and I lived through and traded right through here. And it was like, you know, God, we thought right here was never going to end. We thought right here was going to go to here. So you have to understand, we've been through this We've been through this, and it's not just 2008 like everybody keeps talking about. Next, check out the chart of the Dow Jones Industrial Average in black, going back to 2003 this time, with the rate of inflation inverted in red. In other words, inflation's upside down on this chart because Williams wants to highlight the relationship. The lowest levels for the red line represent moments when inflation peaked. As you can see, inflation tends to peak right when the stock market's bottoming, okay? You can see it's bottoming. And I think it's really important. Now, these are smaller cases. This is a big one. But if you don't remember, we did have brutal inflation in 2008. especially in energy, right before the whole economy collapsed thanks to the financial crisis. Now that inflation is finally moving in the right direction, Williams thinks the stock market can turn things around. Remember, in 2008, that's the operative thing that people are talking about. I think that that's not necessarily the right analog. Last but not least, take a gander at the chart of the Dow going back to 2020. You see the blue line? This is the correlation of years in the past that best fit the Dow's recent pattern. Now, he's trying to identify patterns to see which ones are like now. It's a 2-year cycle. While Williams isn't a fan of short-term algorithms, he likes coming up with cyclical forecasts based on 2 to 4 years, and based on the years that look most like what we're in now, 2022. His forecast for the Dow is very bullish. As he sees, remember, we're talking about the Dow. As he sees it, last week simply shook out the weak hands, and next year is likely to be terrific. I think, yes, that also that today shook out some weak hands, too. Here's the bottom line. The charts interpreted by Larry Williams suggest that the Christmas is not going to be canceled for Wall Street. He thinks we still have a Santa Claus rally coming, and the ideal time to buy is sometime around this Thursday. More important, now that inflation appears to have peaked, he's feeling a lot more bullish about the long-term prospects of the broader market. Maybe I'm wearing rose-colored glasses here, but the statistics convince me that Larry's going to be right. Let's take some phone calls. Let's start with Ram in California. Ram.
Booyah, Jim. This is Ram in California. I'm a club member,
Ram,
and I want to thank you for that wonderful conference call last week.
Oh, thank you. And Ram is referring to the conference call that we did for the Charitable Trust. And yeah. I think that I got a lot of good comments on it. I thank you very much. What's going on?
So, Jim, I want to talk with you about a fairly large position that I have in Ford. Now, I've been so excited about Ford's EV transition and their shift to selling vehicles directly to consumers, so much so that I went out and wanted to experience it for myself. So I put in an order for one of their new Mach-E electric vehicles.
Sure.
But, Jim, I've got to tell you that Ford has failed me at almost every point in the process, at even the most basic tasks of customer service and delivery. And I feel like I've just lost confidence in them and their ability to execute. So much so that I went out and bought a Tesla instead, and it was just so much better. Now, Ford.
Fair enough.
Now, Jim, I know that you always say that when I know that you always say that when facts change, you have to change with them. So with that in mind, I want to
maybe your situation is anecdotal. I'm sorry, first of all, to hear that that's the case. Second, I'm sure that Ford Service would love to hear about that, and I'm not going to let it die. I hear what you say, and I think we ourselves will get information and refer what's happened to Ford Service, because I don't think that that's exactly how Jim Farley wants his company to be run. I want to be sure it's the case. I thank you for the kind comments about this, about our conference call, but I need to know more myself. Let's go to Alec in Massachusetts. Alec.
Hey, booyah, Jim. Thanks for taking my call.
Booyah. What's up?
I'm looking at Service now. Just wondering if you would trade it or fade it from this level.
Well, we're not in the trade and fade for Service now. We want to take a longer-term view, which would mean buying some now and buying some, let's say, if it went down a little more and down a little more. We're not traders on Mad Money. We're believers. And we believe in Bill McDermott and believe in Service now, but we also believe that the stock could be high at this very moment relative to the actual stock market, which is in, as I've said many times, tough shape for the companies that are high multiple stocks. All right, tonight's chartist thinks Santa Claus is coming to Wall Street and that the ideal time to buy is sometime around this Thursday. Keep that on your calendar because we're not that far, but it sure seems like we are, right? As for myself, I'm not sure if he's right, but I sure hope he is. Now, there's much more Mad Money ahead. I've turned in a bunch of homework stocks recently, but which are real and which are duds? I'm ranking the recent names that you stumped me on. And Elon Musk turned to Twitter to see if users thought he should continue to serve as Twitter's CEO. And with the popular vote saying he should step down, what's next? I'll give you my take. And all your calls rapid fire in tonight's edition of the Lightning Round. So stay with Cramer.